This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
New Zealand late on Sunday welcomed the United States' announcement that it would remove additional tariffs on a range of New Zealand agricultural products, including beef, offal and kiwi fruit, but said it would like to see all the additional U.S. tariffs on New Zealand goods removed. President Donald Trump on Friday removed tariffs he had imposed on more than 200 food products, including beef, amid consumer concerns about rising U.S. grocery prices. The U.S. remains an important trade partner for New Zealand, and the decision to lift these tariffs is a step in the right direction and will be welcomed by exporters who have faced months of uncertainty and higher costs, New Zealand's Trade Minister, Todd McLay, said in a statement released late on Sunday.
Oil prices dipped slightly on Monday as loadings resumed at Russia's Novorossiysk export hub after a two-day suspension at the Black Sea port that had been hit by a Ukrainian attack. Brent crude was down 5 cents at $64.34 a barrel by 12:54 GMT. U.S. West Texas Intermediate crude lost 8 cents to $60.01. Both benchmarks rose more than 2% on Friday to end the week with a modest gain after exports were suspended at Novorossiysk and the neighboring Caspian Pipeline Consortium terminal, affecting the equivalent of 2% of global supply.
Moving on to the top news in the energy sector.
India has exported its first ever jet fuel cargo to the U.S. West Coast for energy major Chevron, according to trade sources and shipping data, seizing upon a rare arbitrage opportunity to fill supply shortfalls in Los Angeles. U.S. West Coast jet fuel production has been curtailed since October, after a fire at Chevron's 285,000 barrel per day El Segundo refinery in Southern California forced the company to take multiple units offline. About 60,000 metric tons, 472,800 barrels, of the aviation fuel was loaded on Panamax tanker Hafnia Kalang between October 28 and 29 from the Jamnagar port, where Reliance Industries run a refinery, according to data from Capella, LSEG and 4 trade sources.
Russia's Novorossiysk port resumed oil loadings on Sunday after a two-day suspension triggered by a Ukrainian missile and drone attack, 2 industry sources said, and LSEG data showed. Novorossiysk and a neighboring Caspian Pipeline Consortium terminal temporarily suspended oil exports, equivalent to 2.2 million barrels per day, or 2% of global supply, on Friday. Global oil prices rallied by more than 2% on supply fears after the attack. According to LSEG data, 2 tankers, the Suezmax-class Arlen and Aframax-class Rhodos, are currently loading oil at the port's berths. The Ukrainian attack damaged 2 oil berths at Novorossiysk. Next, we have the top news in metal markets. Copper prices fell on Monday, weighed down by a slightly firmer dollar, fading hopes for another Federal Reserve rate cut and a host of macro concerns. Benchmark 3-month copper on the London Metal Exchange was down 0.5% at $10,802.50 per metric ton in official open outcry trading. The metal used in power, construction and manufacturing is considered a bellwether for the health of the global economy. There is little change to the underlying narrative in base metals, with the market largely defined by muted activity as participants wait for delayed U.S. economic data and clarity on monetary policy, Neil Welsh, head of metals at Britannia Global Markets, said in a note.
Iron ore futures prices climbed on Monday to their highest in 2 weeks, driven by firm near-term demand and revived hopes of stimulus from top consumer China after a raft of weak data. The most traded January iron ore contract on China's Dalian Commodity Exchange closed daytime trade 1.81% higher at 788 yuan and 50 fen, $110.97, a metric ton, its highest level since November 3. The benchmark December iron ore on the Singapore Exchange rose 1.57% to $104.20 a ton, as of 0715 GMT, its highest level since November 4.
We will now look at the top news in the agricultural sector.
Chicago soybeans rose on Monday after U.S. President Donald Trump predicted more Chinese buying of U.S. soybeans following the trade war truce between the two countries. Corn and wheat rose on bargain buying after Friday's falls as dealers focused on reduced corn crop estimates from the U.S. Department of Agriculture. Chicago Board of Trade most active soybeans SV1 rose 1% to $11.35 minus 3/4 a bushel at 12:19 GMT. Corn climbed 0.2% to $4.31 minus 1/2 a bushel, and wheat rose 1.2% to $5.48 minus 1/4 a bushel. Trump said on Friday that China would buy U.S. soybeans and other farm products and that Washington and Beijing had held talks on the subject.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.